Your boy is excited today. I am pumped. I am happy. I'm wearing a green hat that looks ridiculous on my head. I'm wearing a green shirt. We got the green flag in the background, which, Ninja boy, what's up? But your boy is excited today. I am excited today. You want to know why? You don't know why I'm excited? Because my Robinhood portfolio, which is my passive investing portfolio that I don't really think about too much, just crossed $3,000 invested in there. Bro, this is big for me. This is, at least for me, it's like a big deal because I just do $50 every 2 weeks that I just put into this portfolio, and that's what I've been doing, and it's so easy. And now what I'm starting to see is just how quickly the compounding effect is starting to take over, even though it may be in small parts, but I'm seeing that effect showing up in the portfolio. But we're going to talk about all the holdings that I have in this portfolio, the changes that I've made in this portfolio recently, and just overall my mindset whenever I'm investing in this portfolio. You ready for it? Let's get right into it. All right? Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. Turn that thing, say it with me now, agreed, because we're talking money, baby. What's up? I'm just kidding. I'm taking off this hat because it's hot. I'm really hot right now. But anyway, I am excited because my portfolio just crossed, my Robinhood investment portfolio just crossed $3,000. Man, it's just crazy when you start doing something consistently, what am I talking about? That's how excited I am right now. I don't even know the words that are coming out of my mouth. But anyway, it's just incredible just when you start doing something consistently, the results that you can get out of that thing. If you've been following the journey as far as this Robinhood portfolio is concerned, it's literally, I started out just investing $50 every 2 weeks. I mean, prior to this, I had tried to invest, but I didn't really take it seriously. I bought one share of Microsoft, which is where you can see right there. I bought it a long time ago, but I never really took it seriously or anything like that. But then last year, at the beginning of last year, as I started learning more about investing, I started learning about other people teaching me how to invest, being on YouTube. I was like, you know what? I just need to make this a consistent effort. I just need to make this something that I do on a regular basis. And I decided, you know what? Every 2 weeks from my paycheck, $50 is going to go into my Robinhood portfolio. Every month, $100 is getting invested. And from that point on, I just did it consistently. I just continually put $50 into this Robinhood portfolio. Now, that doesn't mean that I didn't lose money or I didn't make mistakes. I definitely made a lot of mistakes when I started off with this portfolio. I was buying basically anything and everything because I didn't really understand how it worked. I didn't really understand investing. I didn't understand how I was supposed to go about the whole process of investing. During that process, I started changing my mind. I started learning more. Plus, because of the way Robinhood is, I like the interface, but I didn't like the fact that it made you almost start gambling on stocks. It made you want to do more trade. It made you want to be more active in investing. So I decided, you know what? I'm not going to have single stocks in Robinhood. And then I found out about M1 Finance, which we'll look at the M1 Finance portfolio another day. With that being said, let's just dig right into the portfolio to show you exactly what it is now. As I said, now we're up to $3,016. At one point today, I was all the way up to $3,040, but the web, the stock market just didn't like me that much. This is one thing that I always want to share with people. You don't need hundreds of thousands of dollars to get started investing. You can start right now and just start doing things like dollar cost averaging into ETFs, which is what this portfolio is designed to do. But anyway, as you can see in the portfolio, we have mainly, 1, 2, 3, 4, 5, 6, 7 positions in here. And we'll talk through all of them. So we'll start off with Microsoft. Microsoft was literally the first stock that it's the second stock I ever bought. The first one I ever bought was Apple. But Microsoft was the first one I ever bought on Robinhood. And I just kept it. And I've kept it in there. And it's been good. I mean, I've had 121% return on it. I wish I had bought more when I started investing, but I didn't know any better. I didn't even know what I was doing. I just knew that everybody uses Microsoft and Microsoft is a good company. And literally I had watched a video talking about how Microsoft had changed their image. And I was like, you know what? That is true. And then I invested in Microsoft. So that's how I got Microsoft. So Microsoft is one of my few single stocks in here. And then we have Ally Bank. My goodness. Ally, man. Sometimes you just gotta go back in the past and look at what were you doing? It's just sometimes there are some things that are just so like, it's just so right there in front of you. Because what happened was last year during the pandemic, everybody was like, oh, the banks are over. It's over for every single bank. The banks are dead. Like, they're going to go over. We're going to have the same situation that we had in 2008. Nobody was listening to the Fed at that point in time. Now everybody's freaking out at every single word that the Fed says, but nobody was listening to the Fed. But at that point, I was like, wait a minute. I'm still using Ally Bank. My sister is still using Ally Bank. My brother is still using Ally Bank. My friend is still using Ally Bank. It's like, wait a minute. Ally Bank is not going bankrupt. Ally Bank is not getting destroyed out anytime soon. And at that point, it was trading at such a ridiculous level. Like, if we do the 1 year look at this, Ally was all the way at $16. $16. I was like, and at that, I was like, you know what? I'm buying. I that's what I did. I just bought. I was trying to figure out, like, how do I want to invest? This was a lucky investment. I'll say it every single time. This investment was so lucky, but I bought into Ally, and that thing has almost like 2x on me, if not 3x, for the amount of money that I've put into Ally Bank. So again, I got lucky. I'm not going to say like I knew something. All I knew was like it was trading at ridiculously cheap ratios, and I just bought into it. But if I had a better understanding of investing at that point in time, I would have put a substantial amount of money into Ally Bank at that point in time, because it was so obvious to me at that point. The next one I have on here is Royal Dutch Shell. It was one of those one-offs. I was driving home from work, but I use Shell gas all the time in my car. And I was like, you know what? I need them to pay me some money back. So I bought one share of Shell or something like that. Like, I just paid something for it. It's done pretty well, but it's not something that I'm going to be investing any more money into Shell. The next one is my biggest position, which will come back to that one. And then these two, Palantir and ARK. These were YOLO. I mean, this is one thing that I've learned with investing. In order for me not to go crazy and do everything that everybody's telling you to do, I think it's okay for you to have some ridiculous bets in your portfolio, or some ridiculous buys in your portfolio. At least for me, I'm not rational. I know I'm not 100% rational, and in order to control my irrational side, like sometimes I just gotta let the irrational side live. Part of letting my irrational side live was I think it was a tax refund. No, it wasn't tax refund. It was the stimulus check. I got some money from the stimulus check, and I was like, yo, why not? I'm gonna put some money into Palantir. I was like, why not? And I'm losing a bunch of money in Palantir, but the idea for me was like, I'm gonna put some money in Palantir. I'm just gonna buy it and see what happens. And so that's what happened with Palantir, and that's what happened with ARK as well. Now, do I regret putting money in both of those? A little bit, because I'm losing a substantial amount of money in them. But at this point, it's also a lesson as well. Like, every time I open up my Robinhood, I see ARK, I see Palantir. It reminds me, like, you know what? Maybe it's better for you not to jump on the hype train. Maybe it's better for you to stick to the things that you actually understand and that you know. But it's just gonna remain in the portfolio. I'm probably not gonna add any more to it. Actually, the other day, I actually added like $1 to ARK. And then I texted my guy, Tolu, who is like a bear on ARK. He writes really good articles. I'm gonna put a link down in the description for you to go check out Tolu's notes, because he writes really great stuff just analyzing the stock market. And I love just his mentality of going through it. He helps me be more rational in my thinking. And I knew that I would tick him off if I texted him this. So I bought like $1 extra of ARK. And then I texted him, I was like, yo, I bought more ARK. And he was like, are you serious? And I was like, yeah, I bought like $1. And he was like, oh. But it's just, you know, sometimes you just gotta allow stuff to happen. I mean, you just gotta have fun with it sometimes. At least for me, I'm not super rational all the time when it comes to investing, because I think there's a spot for you to just have fun within your portfolio as well. I'm not going to say it should be like a large part of your portfolio at all. Like, it should be a very small, less than 1% of your portfolio in total. And then finally, we have the biggest holding in my portfolio, which is SCHD, which is Schwab US Dividend Equity ETF. Of the $3,000, this is $1,800, and I've been dollar cost averaging into this. I remember when I first started, I found this out when I was watching a video, and I was just like, you know what? I'm going to use this to fuel everything else. And that's where I started off. I just started dollar cost averaging into it. Just looking at the holdings within this ETF. It has Home Depot, Pfizer, IBM, Pepsi, Cisco, Amgen, BlackRock, Merck, Coca-Cola, 3M, Verizon, Lockheed Martin, US Bancorp. It has a lot of different companies in here that I actually kind of like. And so it pays a very good dividend. I mean, the ETF has 101 companies within it. So for me, learning about ETFs and also learning about dividends, and I was like, this seems to be the best one that has the potential for growth and for dividend growth as well. So that's why I selected this one, and I've just been dollar cost averaging into it. I stopped focusing on spreading myself so far apart. I mean, at one point I was doing $50. I was trying to buy Shell. I was trying to buy all these different companies that I had at one point. And I was like, no. Let's get focused, because that's one thing that can happen when it comes to investing. You can be so spread. Your mind can be so all over the place that you never actually get focused into what you need to be. And that's what I started doing. I was like, it's time for me to get focused. And that's what I did. That's how I now have about 24 shares of SCHD and almost close to $1,800, with $1,400 of those being my money and then $400 being gained. I'm just excited, man. Even though, and now one of the things I'm seeing it compound quicker. So this portfolio at the end of December was at $2,000. And now we're in just May, 5 months later, and this is already hitting $3,000. Look how fast things are compounding. At least to me, it's very fast. I'm just noticing a trend and a difference. It took me all the way from January to December to get $2,000 into this thing. Now it's taking me just 5 months to go another $1,000, which means that hopefully at the end of this year, I will be at probably close to $5,000, maybe $4,500 to $5,000, maybe, if the market keeps doing what the market does. But even if it doesn't, I will at least have put $3,000 of my own money into this, if I get some extra, money that I make on the side and all that good stuff. So the point is, you just got to be consistent. You just got to be consistent in this. Don't complicate the whole thing. If you don't want to pick stocks, if you don't want to try and figure out how a business operates, you don't have to. All you have to do is buy an ETF. Maybe you buy the S&P 500 ETF. Maybe you buy an ETF like SCHD. There's a bunch of different ETFs out there that you can buy into and just dollar cost average, especially for those of us who don't want to spend the time to try and pick good businesses, who don't want to spend the time to try and time when is the best time for me to buy into a business or anything like that. This is a great option. Buying ETFs is a wonderful option as well. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this. And I'm going to put this hat back on because we got to celebrate. 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 All right. I'm going to stop keeping y'all in this video. I'm going to catch y'all up next time. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And I'm out. Peace. Whoosh.